Hey everybody, hey traders, Chris over here with another installment of my Keep It Seriously Simple video series where I'm taking my best practices, my best trading strategies, and teaching traders in any financial market how to be more consistently profitable. Now it is a weekend edition, so I'm keeping it seriously casual today, but we have some great information. Today's video is all about adding to winning trades. Now, when I first started to pick up some decent profits in the market, I was willing to fight through some trades. And then I realized what it's like to sit into a drawdown that lasts for 3 months, lasts for 6 months, lasts for longer than you're comfortable. So when I started to tie in the emotions and the stress of sitting in bad trades, I had to realize that there's got to be a better way to make profits on the right side of the market. So what I want to do is get a little bit of action on the whiteboard and then go into some examples in the charts and talk about adding to winning trades. This has also been a big demand for subject matter as far as this video series, because I have a lot of traders in my trading room that we have had some great trades and we have added to winning trades where we produce a lot of fantastic results and profits because of it. And we do it with a lot less stress, which is a win-win. So here's what I used to do. What used to happen is I would have the idea of why I want to take profit, let's say here, and my marker doesn't want to work, so let's switch colors. Just a quick edit for the camera. I have 4 markers right here, 3 of them don't work. So I'm going with the one that does work. Let's get back to it. So let's say that I have a destination that I know I want to take profit at. So what I like to do is I plan to build positions towards a profit level. Now that profit level to me, that destination may be a combination of pivots. That might be a combination of, if it's oversold in this case, I'm going to buy it back. If we have oversold conditions, if we have divergence, if we have pockets, pivots, all these inefficiencies, all these things that give me a technical reason to start getting into trades. This is my destination, all right? So this is where I want to take all of my profit, and let's say that price is far enough away that I'm starting to become interested in that trade. Now, let's go back 10 years, okay? Now, I was starting to trade like this, and I was starting to pick up a buy trade here, and I would plan on getting profits back at that level. Now, a lot of times I was experiencing some great trades and great profits because it was going to that destination pretty quickly. And then for the first time that it had been like, 8 or 9 months of good profits, consistent profits with, a high win percentage and not a lot of drawdown. And then all of a sudden the trade decided to do that and keep going lower. Now, I was okay with that because I wasn't trading super large, but it was a point where I now have to manage that trade. Now, of course, you might be saying, well, you can just stop out, right? You can just get in and stop out, right? But it's not that easy to pick the bottom, okay? There is a saying, Confucius say, those that pick bottoms wake up with smelly fingers. So I understand that I'm getting in here, but if I was going to put a stop loss right below that, I would probably get stopped out, take another trade, get stopped out, take another trade, get stopped out, and that's going to take down my margin. And then I'll be so discouraged from the trade that by the time I start to participate, I'm just getting it back to the destination to make up for the losses I've taken along the way. So what I've opted to do instead is I'm looking at testing the levels. And what would end up happening is the trade would go here to a point that I'm interested in trading. So I start to buy, and I buy it fairly small. And it goes a little bit further, I buy it again, goes a little bit further, I buy it again. Now, what I was doing here is I was essentially taking on positions to get price back into my profit zone, okay, to get price back into my target, my destination. Now, what I'm doing now, this is a decade plus of trades like this that I've worked my way through. What I've gotten better at is I'm now not entering as early. So my best practices for this video series is, rather than getting in right away because it looks like it's appealing to me, I'm waiting for a little bit more evidence. I'm exercising a lot more patience. And so when price is falling, I want to get in. And if I decide to get in, it's going to be a really small conservative entry. So that's the key here, is if you're going to get in early. So early, I'm going to say must be small. It must be small. Conservative. Do the math on it. If it's a 0.05% risk, 0.1% risk, very, very small fractional percent. Because if it goes further against you and you're willing to ride that dollar and percent drawdown, you want to make sure that it's nothing that's going to be too stressful, right? It's not fun to take a trade, have good alignments, good conditions, and not see it go your way. But the reality is, if I believe that we are going to get back to this profit zone, I'm going to start taking positions and start building the position back to it. So the first trades must be small. Now I'm willing to add to it for sure if we're going down lower. Now, what I used to do is I would add, go a little bit further against me, I'd build up these positions here all on the left side of the trend line. So if we had a trend line here, or the conditions are not confirming that it's bullish because this would be a buy trade, I'm still trading the left side of the trend line, and I call that anticipation. This anticipation is fine, but it's not confirmation, and that's what I call this. This is the right side of the trend line, and that's confirmation. So left side of the trend line, I would trade early. Now I have to trade it early and trade very small. On the right side is where I start to see that price starts to cooperate, price starts to go my way, and I start to add more to it. So to summarize this lesson really quick on the whiteboard, here's what it looks like. If I have the left side of the trend line, or the left side where I'm trading anticipation, I know I'm getting in a little bit too early, and clearly I know that because price continues to go a little bit against me. Now, at some point when I decide to test the levels, that's going to be entry 1, and that could be a variety of conditions where I'm like, I believe that it's at maybe a minor support level that I want to buy from. If I see another support level, I may put in a second trade. So I typically build small positions, probably around 3 entries. So possibly 1, possibly 2. If we break a trend line, I like to test that level again and see if I can have trade 1 that I may have gotten into early. Trade 2 might be the response that the bulls are starting to come back and I get more confirmation. 3 is a retest of the same low or a slightly lower low to have this market then start responding. And this, on the right side of the trend line, and trading confirmation, that's where all the magic happens. That's where adding to a winning position helps make us a lot of profit. So if I test the levels here, and what's important with all these tests is that these are super small. The dollar amount, the percent amount is very manageable. You should not be stressed about a small trade and building a base position. Now, what I'm going to do when I see more bullish confirmation here is I'm going to keep this profit target in mind, and I'm going to start adding to this trade. Now, how do I add to it? There is something in a lot of broker platforms called a buy stop order. And what that looks like is for a buy stop order to be placed, that has to be above current price. So some might know it as pending buys, but a buy stop order through something like a Forex broker, a buy stop order means if price is down here off of these lows, I can place buy stop levels up above price. And so what we've been doing in my trading room, what I've been doing for these big profits is I will take this base position, have more confirmation, and I will start stacking buy stop orders. So I will put in a buy stop order here, and then maybe 20 to 50 pips higher, another buy stop order, another buy stop order. Now I don't go crazy and take this all the way up because you have to remember, I want this to be my profit destination at the top. I believe that price is going to get there. Now, if I added trades all the way up here, that's fantastic. Obviously, that's a lot of profit because we believe that price is going to that profit level. However, as you're adding trades to the upside, my break-even point where I build these small positions, my break-even point's also going to be shifting up with price. So I'm really careful about not adding too many trades. Typically what I'm doing is if I have, let's say, 2 to 3 positions built, I will probably take 3, maybe 5 more positions. So 1, 2, 3, 4, 5. What I'll do is I'm going to take 1, 2, 3. I think we can be a little bit better here. So I would probably take, 3 buy stop levels. And if there's a pullback, let's say we have a nice bullish move here, we get filled on a couple positions, and then I'm going to look for a pullback here, maybe at a 4th, which that would actually be a limit buy. So we have buy stop levels here, which means price is moving through my levels and moving through my entry levels. And then we could have a buy limit right here, where that means if price is already above us and it pulls back, we're getting a buy limit trade. So building small, adding small, it builds up to a position size that I want. So typically in my Forex trades, this might start off with a, for 6-figure accounts that I trade, this might be a 50-cent position, maybe less. This might be like 50 cents or $1. I will probably build this up to a couple of dollars and build this up to a few more dollars and eventually have a $5 to $10+ position built up, all with small trades, and then go after my profit target. And so if I can build a position like this, a lot of times for me, if I can build a position up and this ends up generating, $1,000 or more, I'm pretty happy with that, because of trades like this, I can probably find, 60 to 100 trades a year like this. Okay, it's certain currency pairs, it's certain instruments, but it takes some dedication to these trades, number one, to find them. It takes, trust and belief in the technicals to believe that, price is going to get back to that destination. And that's why if we start small and it goes against us, we can manage it, right? If we start small and we start putting buy stop levels in and they're never filled, well, that's fine. We can just shift the buy stop levels down lower and start building a lower position and then have more to take profit. So and again, I think this is a good plan. This has actually been working out really nicely, because let's say this entire move is, well, I'll just use Forex as an example. Let's say we found a nice floor at 1.20, okay? And let's say that this profit level is 1.25. Now, that would be about 500 pips. So 500 pips of movement, we could probably generate on these trades, 300 pips here, 500 pips here, 500 pips here, 300 to 400 pips there. And we can build up a, 1,000, 1,500, 2,000 pip profit when it's all said and done. We can certainly make the type of money that we want while keeping our drawdown relatively tight, because we're only taking small trades and we're only testing the waters. So we never have to commit to the trade early. It's test. If we get an entry here, we believe it's going to our profit target. But if it doesn't, this is why we keep the trade size small, so we can continue to manage it. So left side versus right side, anticipation versus confirmation, test the levels, manage the stress that comes with the drawdown. Okay, how do you do that? Keep the trade size small. That eliminates the big drawdowns. That eliminates the, the overexposure. You still keep plenty of margin available so you can add more to it. And what's amazing is you take, let's say, a 500 pip move, generate, 1,000 to 2,000 pips of profit, and your reward, when it's all said and done, and this is a unique way of doing this because, traders are kind of inundated and fixated on this reward to risk ratio. Well, if I have kind of a flexible risk ratio, right? This is my flexible risk, but this is my confirmed reward. Now, I'm not aggressively adding to it until price is confirming. So what ends up happening is we keep our risk relatively controlled and we let our reward run. So you've heard the saying, let your winners run or cut your losers off quickly. Well, if we're going to be flexible because we're not exactly, professional bottom pickers or top pickers, which nobody is, okay, we keep our risk small by keeping our trade sizes small. But what we do is we maximize our profits and we maximize our reward and our gains by letting price confirm and go through our entries, build up a slightly bigger trade size. It's all done with small trades. That's the key here, is keep it small, build up those positions. But I really like adding these positions. And this is something that I have not done in over, 12, 13 years of trading. The last 2 or 3 years, I've become really good at this. And some of my biggest wins have been, tens of thousands, even hundreds of thousands of dollars because of that. I don't want to trade any other way. If I have a setup like this, I am all about it. Now, there are certain instruments that I would never trade like this. There are certain instruments that I love to trade like this. So it works. It's a unique spin on keeping the risk small and letting your profits run. It's a unique spin on how do you manage drawdowns. But a lot of traders, what they tend to do is they try to be so precise with getting the entry, having a stop loss, having that very tight equity management plan. But when price goes this way, and you know that the probability is it should go here, and it probably will. But what we tend to do is if we trade it too big or overcommit, we get stopped out, we get stopped out, we get stopped out, or we just get impatient, we lose confidence, and then we notice that it does go to our profit target. We notice that, man, I had that trade right, I had the direction, but you just executed it incorrectly or executed with poor timing. So I like to buy myself the time, the freedom, the flexibility of trading small and adding to those trades. So the key takeaway here before we get into the charts, keep it small, test the levels. With more confirmation, you can build to it. I'm typically using, there have been some trades that I've taken this year where I've had 15 to 20 open positions. Now it started off as maybe 3 to 5 built up small positions, and I just start stacking orders like crazy to the upside, another 10, 15 trades to the upside. And what I'll do is as these are in profit, I will scale out and I'll take some partial profits, get back in, scale out more. So I just turn this reward, I try to maximize those gains to the best of my ability. So keep the risk small, let the profits run. It's a little bit, to me, it's a little bit more dynamic than just having to have that entry, stop, take profit. You know, that's great in theory, but in the real markets, it is so difficult to consistently get those bottoms, get those tops, that if I'm just somewhat accurate on this low and somewhat accurate on this high, I can manage my risk down here. I can maximize my gains up to that profit target or close to it. Again, doesn't have to be perfect. I've said this for many years now. I trade to be profitable, not perfect. And I think that's something that can help a lot of traders. So what I like to do now is actually go through some charts and show you some examples of what we've done, you know, myself and my trading room, to maximize some of these big add-on trades and these buy-stop levels, and I'll walk you through it. So see you in the charts.
All right, so let's take a look at some charts. Let's see what it's like to add to a winning position. So we're going to start with one of my favorites and a trade that helped myself and traders in my trading room generate a ton of profit. It just required a little bit of patience, but this is in the Forex market. This is the Aussie New Zealand. So it's the Australian dollar versus the New Zealand dollar on a daily chart. Now, what's interesting about this currency pair is it is probably one of the most technically obedient currency pairs of all the 28 majors and crosses. So I tend to watch it very carefully and try to exploit any possible opportunity that I can. So we'll start on the right side of the chart, and we're just going to walk through this experience together. Now, to give you a little bit added structure, I'm going to go ahead and highlight this vertical line right here. Now we're going to take a look left on our chart and see some previous price action so we can have some idea of how we planned this trade. So this is a daily chart. What I'm going to do very quickly is go into the weekly chart, and that vertical line will still be on my chart. If you're wondering what charting software I'm using, I'm actually using smarttrader.com. So it's a really nice, clean, intuitive charting software. And we'll take a look at this. So this is the Aussie New Zealand with over 20 years of history. We had some trends early on, and back in the early 2000s, we had a high point back in around 2011. We had a low point around 2015. Now, since we established that low, if we talk about support and resistance, to me, it would make sense that support off of these lows, I'm actually going to use a line here. If we had support off of these lows, where the market has never been lower, and the market has never been higher, it would make sense that if we started to accumulate some buy positions, we have a pretty good chance of at least trading back into range highs or possibly making a recovery and breakout into higher highs. So every time I've seen this currency pair get back down towards these levels, and this low here is around 1.00, we've had retests at 1.05, 1.0450. So basically, I'm just trying to buy this thing low as often as I can. So let me go ahead and clean up some of this here, and you get the idea that we are zooming back into that price. Now, what I'm going to do on this chart is also put the low and put the high on the chart. So these are fairly conservative levels. I really think that if you give this currency pair time, even right now, I think if we give this enough time, that this currency pair will ultimately come back into that area. And I'll change this to yellow right there. So I think that we will get back into this 119, 1.20 region. We just have to find the right levels to buy low and hold it and be willing to hang on to this trade. So let's fast forward to my daily chart and go into a smaller time frame and start right here. How this whole trade started. Okay, so this trade was taken in late 2019. And it was one of my first trades planned in 2020 with my trading room. In fact, I can recall on my document, I have a Flex Trading Room document that we started to discuss this the first week of trading, like January 6th. I said, this is a trade I'm going to be in with a position. I'm going to build a position. I'm going to add lots to it. We're going to make lots of money. Sounds good? Right. And everyone's like, oh yeah, sounds great. And then they have to experience what it's like to be in a trade like this. So that's what we're going to do in this video. So there's my vertical line. And what we saw here was consolidation going into the end of the year, a very aggressive sell-off. And this is what started to pique my interest. So I'm going to put a green line right here. Let me change that to green. And a green line right here. So that is going to represent a window for me to trade back to. All right. Now, I wanted to start getting myself into this trade. I was a little bit overexcited and a little bit too anticipatory to start getting into this trade because I started to buy it at 106. Now, why did I buy at 106? Because I was confident that we were going to get back into this green zone. Now, understanding that, I've traded this way for a long time, I see that this area was probably going to get retested. Somewhere in here was likely going to get retested. Now, I was willing to say, okay, myself, traders that were following me, if I was going to start buying at 106, I'm prepared to take small trades at 106, 105, 104, 103, 102, 101. I can go all the way back to these previous lows and say that I'm going to buy these support levels. Okay? And so I told traders very explicitly what my plan was. I said I'm trading it small, I'm building some small positions, and then once we have better confirmation, I'm going to be adding to my trade. All right, so that's the first thing, is we have to have a trading plan. If we have a trading plan and we have a directional plan, we test the area that we want to start getting some levels in. So I'm going to buy this one low, and then I'm going to start adding to it when we have better confirmation to go back to our profit target. Okay, so we break down. I'm just going to start highlighting that 106 level. You can see that price finds it. Now, to give you a little bit of, make this a full lesson, understand that there was really no confirmation here for me to buy it. I mean, did I say 106 is a level? Sure, it's a round number. So I bought it at 106, I bought it at 105, 104, 103, 102, all these round numbers. Now, that's just kind of transactional. Those are small levels. I realize that price might go against me, but I was going to manage my drawdown based on a small trade size. So my dollar amount and my percentage amount as far as the drawdown is not too big. All right. So I bought at 106. It kept going down. Now, in hindsight, I could have made this a lot easier on myself. I could have made this easier on the traders that follow me in my trading room. We could have waited for better confirmation, because it just so happens that if we waited for confirmation, you see here that this market is bearish after that aggressive break. It stays bearish. It stays bearish. It really isn't until about this level. Look at how far and fast that fell. And so that was really the first sign that the bulls were willing to step up and do something. So if I had to do this trade all over again, again, in hindsight, I would say the best way to do this would be I wouldn't even start buying it until we broke an aggressive trend line. Okay, well, that put me in here around 104.70. So do I save a little bit of trade? Yes, I don't sit in a drawdown from 106 all the way down, but I get in at 104, 104.50, 104.70, and then I start committing to buying small positions, adding to levels, and then still taking this up to my profit target. So let's watch and see what happens. So I will go ahead and just put an arrow in here so we can follow along with the trade. Now, I'll give you exactly what I did, all right? So I walked through this trade with an arrow at 106. So we're right here around 10600. Okay, and then another one at 10500. And if this style of trading doesn't seem great to you and you want to do your own thing, that's fine. But like I said, this whole idea is my take on keeping the losses under control, keeping the drawdowns manageable, while also letting profits run. I have a lot of commitment and conviction for price to go back to that profit level. So I get it at 106, I get it at 105. I know that if I give it some time, it's ultimately going to get back to my profit level. Now, do I do this on all financial instruments? Of course not. Do I do this in the Forex market all the time? Not really. It has to be a great trade, a great setup, and it has to be super obvious. Okay? And to me, that's the most powerful thing. And I know it takes time. And if traders aren't comfortable sitting for 3 to 4 months in a trade, this isn't for you. But the first time you do this, and you see yourself generate, 5, 10, 15, 20% returns on one single position, that is a massive injection of profit. So it's hard to go back to scalping. It's hard to go back to day trading, because all you do is you take all these trades and you have to be so precise and you have to grind out these profits, when instead I just give myself some time, give myself some flexibility, and I take this massive chunk of profit when it's all done. So that's why I like it. That's why I've continued to do it. And I keep looking for trades like this. So 106, 105, I got in again at 104, which is right down here. So did it find the lows there? I'm trying to get that arrow right on it. Yes, you can see that the wick low, should be generated at 103.87. So I was filled at 104. And, so I have 3 small entries in. And I was willing to take this down even lower. So I told traders this. I told traders I was going to go all the way down to the zeros if needed. I thought we'd bounce off this major support, which is around 10300. So 104, here's 103. These are all pending orders. Okay, so as price was falling, these levels get filled when price crosses them. I can copy and paste that. Had another trade here around 102 that was pending. Another one down here at 101 that was pending. And another one around the zeros, which was pending. Okay, so this was how I planned the trade the first week of January. All right, now let's start walking through this. So we have trades 1, 2, and 3. I'll put a blue line here. So I'll take a blue line, change this to blue. So entry, entry, and entry. These entries are filled. If you waited for a bit more confirmation to the upside, then you're not in a trade until roughly 104.50 or 104.70. And again, like I said, in hindsight, you can plan this out and you can do everything just the way that the chart shows you to do it. But look, sometimes trading is messy. Sometimes it's about being profitable, not perfect. I wasn't perfect on this trade, but I am profitable. So keep paying attention. All right, so we have this trade. We're in 3 positions. Now, let's see what happens. Price goes sideways, goes a little bit lower. Oh no, all right, well, we go lower to 103.25. Did it fill my levels at 103? Not yet. All right, now I was looking at this as a potential bullish pattern. Take a look at this. If I have this trade right here, this looks like a bullish pattern that if we came back down and formed a higher low, we should be able to generate a move back into that profit level. So I was ready to start looking at buy trades to add to my position in here. Okay, now it did need confirmation. I was roughly going to say between 104.75 and 10600, I will start adding a lot of trades. But I did not get filled on those levels because it's not showing bullishness yet. So take a look. Let's see how it unfolds. Price goes a little bit lower, retests the lows. Okay, starts to work its way back up. Now you can see here that if I added to it, which I did right around 104.75, I did get filled. So that was another add-on that I threw in after the fact, right? So I have levels 1, 2, and 3. I have a small add-on trade. I will go ahead and just take another clone line here. And it was added in just above that high. So we had this high around 104.56. I put it around 104.70. So I was adding in another trade there. And I had trades going up above, 105 and 105.25, 105.50. I was adding trades, right? So I'll put in another line there. So let's for the sake of the video, instead of drawing all the arrows and lines, let's just use the blue lines for entries, the green lines for our profit level, and I'll change the support levels to a thick black line or a straight black line. So this is support, and if we go lower, we'll have support as well. So I'll change that down here to a solid black line. That'll be support, right? That way we can see what we're working with. So add-on trade at 104.75, add-on trade at 10500, which will duplicate this level here. And then I have other pending orders higher at 105.25, 105.50, 105.75, and so on, all to get back to my green profit zone, right? So let's see what price does. We hit this 10500 zone, we go sideways. We come back to 10500, we end up filling again. There's 10500, 105.25. So I'm going to take this line, and I'll copy this line. There's another add-on around 105.25. Now, because I'm buying this, all I have to do is see the spread go up to my entry level. This is a buy stop level, so I'm getting filled here as well. So I have now 106, 105.25, 10500 times 2, 104.75, 10400, 10300, 10200, 101. Got it, right? Now look what happens. Now I get filled up here and price proceeds to drop. Now, this might make some traders really uncomfortable. This is why the trade size is absolutely critical, all right? All of these positions right here are small, all right? In fact, at the deepest point for this trade, I was in about a 2.5% drawdown. That's not that much, all right? A lot of times if I'm managing a drawdown that's single digits between 2, 3, 5%, I tend to turn that into like an 8, 9, 10% profit. So that's 6-figure plus accounts across multiples. So it ends up paying out pretty nicely if this is one of those trades. But this is where traders get uncomfortable. So I had traders in my trading room that were not quite comfortable holding these trades, or they thought, okay, well, we're going to go higher, and the market clearly had another plan for the time being, which was it dropped first. Okay, so traders were very uncomfortable with this move. because once it started to go down to these lows, traders were stressing about their trade size, stressing about their drawdown, which I go back to see rule number 1, trade small. Okay, so we trade small, and now what happens? We get filled at 103. Cool. We get filled at 102. Fantastic. 101. All right. Now we're talking. And yes, I did get filled a little bit higher because I thought I was going to chase this up with those buy stop levels to get to my profit target. But the market had another plan. So I get filled here at 103. I get filled at 102. I get filled at 101. And keep looking. Where does it go? All the way down to the zeros. Ridiculous, right? All the way down to the zeros. I was filled at 1.0000. This low was around 89. So I got filled on that low. Now look at this area now. If we have this area as my overall trade. Now, yes, these blue lines represent my entries. Now, where is approximately my break even? My break even for this chart is going to be somewhere in this area. So I'll take this line, make it nice and thick. We have multiple entries up here, multiple entries down here. My break even is going to be sitting somewhere in this vicinity, right around 103 to 103.50. Again, depending on your trade sizes. So this blue line now represents my break even. Okay, now that we've established a very aggressive move to the downside, look, I have multiple positions in here, but that doesn't mean that I can't take more trades. And so once we started to bottom out, which is what I was looking at, and did this market actually do any major structural damage, or did it just come back down to past support? This was the low from 2015, right there, where the market bottomed at the zeros and went crazy for 1,400 pips to the upside. So fast forward to now, and we get a revisit of those lows at 1.00. I'm now in with multiple positions with a break even around this blue line. Now, keep in mind, do I want this to go to 1.14? Of course I do. But this to me was the highest probability and worth holding on to. So as long as we get to 107 or 107.50, I'm going to start protecting my profit. All right. So once we establish our move lower here, I then have an opportunity to start adding more entries. So we fill the lows. You can see all this high volatility. Then it comes back to, okay, well, we've done a pretty good job of keeping our trade sizes small. We've weathered the drawdown pretty effectively. I kept my drawdowns to about 2.5%. I'm really happy with that overall. Even though this is about a 600 pip area, I kept my drawdowns pretty small. Then I started to add to my winning positions. So that means I took those buy stop levels that I had up here around 105.50 and 105.75, and I moved them over into this new area. So you can see here that price came back and retested what was previous support to become resistance, pulled back, went up, pulled back. Now what I started to do was I was looking for price to break back above 103.00. And as soon as we broke above 103.00, I started to look at buy trades. Again, these are buy stop orders at 103.50. 103.75, 104.00, 104.25, 104.50. I started to add a lot more positions based on buy stop levels. So here is 103. I'll just start at 103.50. And let me take that down to a slightly thinner line there. 103.50. And then I'll copy that line. 103.75. And I start stacking these orders. 104.00. 104.25. Now, the only way that these levels get filled is if price cooperates, right? If price came down here, if price, hit this 103 resistance zone and came all the way back down to these lows, okay, well, I would start looking at buying again at the bottoms. And I would buy it again at 1.00 and then start stacking orders to the upside. I had this plan, right? But it started to make a sharp bottom, went up, pulled back, went up, pulled back, went up again. Now, if it came back down, I was looking to buy it again like I have drawn out here. That didn't happen. Instead, what happened was we started to break above 103, which means it overtook this support. And now this level is in the clear to start running. And I had my sights set on the original profit target. Okay, so what do we have? We have this trade running in our favor. We have some buy stop levels that are filled to add to our position. Now, understand that if I'm adding buy stop levels, this is slightly modifying my break even. But I'm moving my break even with the thoughts of this represents all of my trades. So I have, I mean, right here, I'm probably illustrating, we have like 10 plus trades open. Now, I know that in my trading, I had about 25 positions open on this. Now, that might seem like a lot, but they're all really small. I told traders I wanted to build this thing up to a certain trade size. Now, rather than just putting a big trade in, and I could have done that. I could have put in a big trade here at 103.50 and said, okay, there's 10 standard lots. Boom, I'm in. Well, what happens if that 10 standard lot trade goes against me? Individually, that's a much bigger trade size. So I just kept it all really small and I just put a ton of positions in to manage it. Okay, so it's moving, buy stop levels are getting filled, my break even is moving slightly higher, slightly being the operative word there. It's not really adjusting too much. It's moving maybe within like 5 and 10 pips. Now price is going in my favor and price is going to our profit level and my net position is in profit. My margin is increasing. I'm sitting on thousands and thousands of dollars in profit. Now it's appealing, it's tempting to just take your profits, right? It's tempting to look at the chart and say, hey, this is a great trade. You know, we come back to this point right here. Let's go ahead and take some profit. I told traders like it's tempting because if we form a high right there, maybe we pull back, we can add more to it, and then we go to our profit target. But I said, look, I just want to get it back to this zone. I think we can get to this zone right here. That's where I'm going to start taking profit off the table. It was around 107 to 107.50. All right, so just keep that in mind because as we move forward now, we're in profit. And this is the best problem to have is you're managing profit, right? What do you do with all this profit? What do you do with all these dollars? You hang on to it. You manage it to the best of your ability. So we keep going up. We keep going up. We have all these levels. And what happens? Right there. Okay. Push into the high at 106.88. The next day, we push into the exact profit target. There's a high at 107.49. I said at 107.50, I'm going to take profit. We hit 107.49.9. That's 1/10 of 1 pip away. I'm taking profit, right? So it was around 107.30, 107.35. I moved up everything, closed all my positions, ended up closing for a ton of profit. Now on this move, just by pips, right? Now trade sizes is specific to the trader and the trading account. We made around 4,000 pips, and this market moved only around 700 pips. So a 700 pip move that generates over 4,000 pips of profit. Do the math on your trade size. If you're trading micro lots, you're making $400. If you're trading standard lots, you're making $40,000. Okay, I had multiple standard lots running on this. It was a nice payout. It was a great start to my year. It helped me make, a great recovery from March's, crazy sell-off and wild volatility into April being one of my best months of the year so far. So it was well worth the time and energy to plan the trade, and it was certainly well worth the effort to hang on to it. Now, that goes for any good setup. So to recap for this add to winning trades, number one is we want to have a plan. This isn't just like add to winning trades just because you're like, well, I'll just add to it. Well, have a reason why. So the first thing that I would say we have to have is we have to have a profit destination. So whatever your trading strategy is, if you have enough conviction to believe that price is going to go to a certain destination, then that's where we start looking to build positions. So case in point would be something like this. I'll draw a couple of lines here. So if we believe that price is going to come back into, let me use a rectangle instead. So if we believe that price is going to come back into this area and we are looking at this to buy, so if we buy it nice and low, look, if you believe that price is going to go to that profit target, then you have to be willing to say, look, I can put a buy stop level there, and a buy stop level there, and a buy stop level there. And if price jumps around, look, if price goes lower and lower and lower, you're not going to get filled on those buy stop levels. And if it goes low enough and you're more attracted to buying lower, then draw a trend line and start looking to buy it lower on the right side of the trend line. So these buy stop levels can change according to what price is given us. But if we believe price is going back to this region, we are trying to commit to that trade, add positions, and then take a huge profit chunk at our destination. So we want to have a plan. That's the most important thing. If we have a plan, then we trade it, right? So we trade extremely small to keep drawdown and dollars and risk under control. If you don't do that, then you'll never profit from these trades because you'll run into margin issues. You will get stressed out with the amount of drawdown you see and the dollar amount that's going against you. you have to keep these trades really small. Okay, trade extremely small. And then look for evidence and confirmation the trade is now ready to go your way. There are certain times in the Forex market that it's all about technical seasonality. We have certain breakouts. We have certain price patterns. This was a March to April V bottom. It was the middle of March, just like everything else in the stock market. The JPYs, the Aussie pairs, everything had these flash crash lows and V bottoms. And then everything went the way that we thought. So there's evidence there. There's bullish confirmation in this case with this trade that it was going our way. So it's when you get that confirmation, now you're a little bit more committed to the trade. Again, keep the trade size small, start adding those levels, right? The buy stop levels mean that price has to go through that order in order to get filled. A sell stop level means that price has to fall below that level to get filled. We'll have trades that do that as well, all right? And then make sure that you are managing, monitoring, protecting. I had it at some point between 20 and 25 trades. When I closed up everything around 107.25 and 107.50, I was not in all 25 trades. I took off about 5 trades or so of profit, got back in. I took off another few trades of profit, got back in. So any type of wave pattern, any type of hesitation where the market pulls back, we add to those dips. So I was taking partial profits. I was adding more to it. But again, my conviction was we're going to that profit target. And that's where I'm going to take my big chunk of profit. So that's it. All right. Now I know that this is one example, but this is how all of these examples look. I have to find the trade first. If I believe there's a destination, I believe that there's a technical reason for the market to go to that level, then I'm trying to look at how can I position myself to get there. All right, so this happened this year on the Aussie New Zealand. It happened on the Euro Swiss. It happened on the New Zealand CAD. It happened on the CAD Swiss. It will be happening hopefully shortly here in the dollar Swiss. We have lots of positions that when these set up, I'm paying close attention. I'm using good equity management and I'm trading my way through it. I keep the drawdown under control and I add to those winning trades so I can have these big chunks of profit. So even though it's not a perfect set your stop loss here, set your take profit there, instead it's take these trades and keep your losses and drawdowns under control while adding to a winning position and holding that winning position to make sure those profits are worth the time and energy to manage it. All right, so this is a great lesson. I get this question all the time because I do talk about adding to winning trades, but these trades don't set up very often. So when they do, I want to take full advantage of them, and I'll encourage you to do the same thing. So that's it. I'll see you in the next video, everybody. Take care.